We are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Okay guys, we are looking at EUR CAD. That will be the Euro dollar versus the Canadian dollar. Forex 101. We will be, number one, we will be identifying market structure. Number two, we'll be identifying the overall trend. Number three, we'll be identifying SR lines in the market. Number four, we'll be identifying patterns for entry in the market. Let's grab our red paintbrush. Okay guys, so back in May of 93, the market started off right into a push down. It went right into a support. I see a pattern. I'm going to describe what I see. It's a W. Once we see a W, most of the time the market's going up. Sometimes it doesn't. The market goes up after the W is formed, and then we see the push up. For example, the market, first leg of the W, second leg of the W, third leg of the W. We got the push up here. What happens with just the retest, the market pushes up again, it retests the previous areas again to retest the push up higher. So right here is higher highs. This is the highest the market has ever been in EUR CAD. From there, the market wasn't able to hold, so the market dropped right back down. So the market dropped right back down to previous areas of support. Once it went back to support, it went right back up. It created a W, and this will be the first leg of the W right here. This is the second leg of the W, third leg of the W, fourth leg of the W. That's the retest, and the market pushed right back up, and it went right back into the close to the same areas of high highs. It actually went back in the areas of high highs, which we can see this wick. So this long wick right here actually went back and touched. So it went back up to higher highs. The market closed out here. It wasn't able to push up further, so the market retested previous areas of resistance to see if it could push up higher. It wasn't able to push, so the market went right back down. Okay, so when the market went right back down, it created new areas of support right here, and I see a pattern. It's a W, so when we see a W, most of the time the market's going to push up. Here we go. This is the first leg of the W, second leg of the W, third leg of the W. It's the fourth leg of the W. So that's the full formation of the W. After we see the W, it will be always a retest, or most of the time it's a retest, or I should say all the time it's a retest. Head of the retest, and after that the market pushed right back up. Okay, it created new areas of resistance right here, and from there the market touched once, twice, three times, wasn't able to break. So you can see it's trying to form a W. So the retest happened right here, and the market was trying to push up, wasn't able to push. So the market came right back down into this support area here. You have one touch, two touch, and the market pushed up, and look what's forming is another W. One leg, second leg, third leg. Head with that fourth leg, and that's the retest right here, and that's the push up. So once you get that push up, there it is. So once the push up happened, the market actually dropped down to retest previous area of support again to push up higher, and it went right back into previous areas where it was at I guess years ago. I shouldn't say guess, this was years ago. It's back in 05, and we are in 2009, so it went right back into previous areas. So from there the market wasn't able to break through. I see it retested once, but if you go down the time frame, it probably retested more than that. So right here we see it touch once, touch twice, retest previous areas of resistance, and after that the market broke right back down. The market broke our support and came to our lowest low area of support, first level of support, second level of support. So it kind of consolidated up in here, broke up and down. This is the lowest the market has ever been back in, what's that, August of 2012. So from there, the market wasn't able to drop down further. It came up, retested previous area support to break up further. From there, the market came back down to retest areas of lower lows. So this is like the lowest lows areas here. So anything that bouncing up in here is lower lows. Once it get in this area, it's trying to reach back up. From there, we can see that the market is in some type of, I may be calling this early because we still on market structure, but I'm gonna jump to number 2 real quick. The overall trend. So we're working on market structure. I'm gonna throw in the overall trend because everything's happening real fast right here. So we can see is the market is in some type of uptrend, but it's a consolidated uptrend. Okay, but at the end of the day, let's say it's an uptrend. Okay, it gets a little funny when we go down the time frame, so it's not going to look like this. Okay, so I'm going to clear my screen, clear these drawings off, and we're going to work on identifying, which we identify the overall trend. I'm just going to put the trend line on, and next, number 3, we'll be working on the SR lines. We're going to grab our trend line so we can see that the market is in some type of uptrend and the market is trying to return to previous areas of higher highs. Okay, number 3, we will be identifying SR lines. The way we identify SR lines, we grab a horizontal ray. The first thing we want to do is look for price action. Price action is the last active red candle or non-active red candle because it is the weekend and the market is closed for Forex unless you trade in something else. So from there, so we're going to be looking for peaks. So if this is price action, you want to go one level up. So this is a peak right here, so you can drop a SR line. From there, you're going to go look for price action again. We will be going to the next level of the inverted peak, which will be right here. So we can see these wicks bouncing off of there. And let's go one level down, just in case the market breaks through our SR line and go further down, it'll head to the next inverted peak, which will be right here. Okay, so we're not done with SR lines. We're going to tighten up these SR lines inside the blue. So we're going to go down the time frame. We're going to tighten up SR lines. We will be grabbing our horizontal ray again. We're going to change the color to green. So we're going to be filling in SR lines in between these blue lines here. So here go one right here. So this is a peak. We're going to change this color to green. From there, we will be grabbing another SR line, which is a peak, will be here. So all we're looking for is peaks. So here goes some inverted peaks. First, let's work our way down with peaks. So here go another peak here. And let me see, I think I see another peak here. And there's another peak here. And okay, so when it comes to peaks, I think I'm done with that. So we're going to work our way from the bottom up and look for inverted peaks. So if I had to look for inverted peaks, there will be, I had another peak here. I left this peak out. And here is a inverted peak here, so something's going on in this area. So we can see how the market is just nicely just touching the wicks and candles are totally touching my SR lines. And I think we filled in most of the spots. If I had to choose one more inverted peak, I'd probably choose this one here. Okay. So from there, we will be identifying patterns for entry in the market. So let's go down the time frame to see if we can identify what's going on in the market. Okay, so what the market is doing a flag pattern. So I'll describe a flag pattern for you guys. So this would be the pole of the flag. and this area will be the flag. Okay, that's the flag. And so it's almost like it's a pole and two flags. So one pole, which is impossible in real life, but when you want to look at Forex, let's say one pole and two flags. So you have one pole and two connected flags. So this will be a flag, and this will be a flag here. So if you see what the market is trying to do, is doing these up, like these U's. So that's what the market is going to try to do. Okay, until it fully breaks out or breaks down. So I'm going to clear these red lines off, and we're going to go. So we know it's an uptrend, so we're looking for buys. So we're looking for buys. So we're looking for the market to head back up to the top here. If we grab our long position and we find entry right on this green line where price is at, we can take it to the next level up. Well, I won't even say take it to the next level up, because we know that the market, or we can see that the market is in a flag pattern, is keep returning to previous areas of higher highs over and over again. So if we set our target, it will give us a total of 449 pips, which is an amazing move. If the market goes back, let's see how far it can be, and that will be possibly a 43 pip low. So 449 pips on the way up, 40 pips on the way back. Let's go down. Let's go back to the weekly time frame to take a closer look. So I can see the flag on the daily and the weekly, but you can see it clearly. I feel like you can see it clearly. It's tighter on the weekly, but a daily is more stretched out. But once again, same thing. You have the pole, and here goes the flag, and it returned the price, and here goes the second flag right here. So the second flag returned back to higher highs, and it dropped back down. So the market is trying to go right back up. So it's going to keep doing that until it get that full breakout or that full breakdown. So we're in that uptrend. So we're looking for a pattern to happen here to take it for a buy for an estimate of 449 pips. So I'm going to clear my screen, and we're going to take a look and see if we see any patterns in the market. Okay, so besides that pattern of the flag, so the flag basically identified what the market is doing. You had a pole that shot from almost lower lows to higher highs, and it created these U patterns and kept on making these dips from higher highs to lower lows, higher highs to lower lows, higher highs to lower lows. Okay, so we know the market is going to try to return back to higher highs from what we see. So if you're looking for entry, this is when you go into Google, you would type in Forex pattern cheat sheets, and you will look for some type of pattern for you to find as entry for us to take it to the top. So actually I see a pattern right here on the daily time frame, and this is engulfing. Okay, so we can see that this green candle engulfed the red. So once the green candle engulfed the red, it shows enough strength that the market can shoot up. But don't get me wrong, this is the E's. So when you trade in these E's, EUR pairs, you got to remember their pullback is a little more, and sometimes these E's drop wicks, as in the EUR pairs can drop these wicks that can knock you out your trade. So even though I sat here and said, okay, I felt like the TP will be 449 pips, our stop loss will be 43 pips, but even though I set out pips for 43, we can see in this area here, this wick would have knocked us out our trade. So if it would, we probably would have to pull it back a little more. So let's pull it down a little more, maybe up to, hold on. So we can pull it down a little more. Let's say we take it the right out, still not working. So let's say if we pull the market down to about this wick right here for an estimate of 63 pips for the low for the stop loss, and 449 pips to the high. So that's an amazing move. So once you see that engulfing pattern just happen, you can just take the entry and the market can go up. But at the same time, even though we'll see that engulfing pattern, sometimes the market may can do a W and shoot up, or it can just do an M and come down. So this could be like the first leg of that W. And I'm not saying this is happening, but it can happen. So it can be like, it could do something like this. The market can do that first leg of that W. We can find entry here, and then the market come back down, create that third leg of that W. Or it could just come down here, it can knock us out the trade of our stop loss. And if it does, don't be discouraged. Just get right back in the market for that fourth leg. And when that fourth leg is going to probably return back to here, we're going to see some type of retest. So once we see that retest, we can see that the market is going to go straight up. Okay, and then that's when you take it for that 449 pips. So I know we see that engulfing pattern. So that engulfing pattern does confirm that the market is going up, but you never know. The market can still drop a second or third leg or a triple bottom. It can knock you out to trade, or just come right back down a little further than what it did before it shot back up for a total of 449 pips. That is an amazing move. Okay, everyone, this is Cam Jones FX Daily Analysis. Thank you for watching, and thank you for your attention.